Good afternoon, everybody. My name is Max. Really good to be here with you today. Let me just get my screen up. So my name is Max. I cover Europe at the Mastercard Economics Institute. I'm based in London, and actually in my neighborhood in London, there's a part of it called Little Portugal, where there's a lot of Portuguese people and Portuguese restaurants there. But it doesn't really look the same as Cascais, so it's really good to actually be here in person. And I'll get back to that point at the end of my presentation. The reason I'm talking to you today is because at Mastercard, obviously, we have a huge amount of payments data where we can find really interesting payments insights. And my team, we're a team globally of economists and data scientists, and we're looking at what's happening in the economy and looking at what's happening in our payments data, and we're extracting relationships between the two to try to help our clients come up with strategies and decisions based on what consumers are doing. And that's really relevant to this sector, to an industry like luxury. And so today I'm going to take you through some of those insights. And I'm going to have sort of three parts to this. The first, I'm going to look at travel and how Portugal fits into that and how it's moving more towards luxury. The middle part's going to be more about luxury goods, luxury retail, the traditional luxury that we think about. And the last bit is going to be on experiences, and particularly wellness experiences that consumers have really been prioritizing since the pandemic. And also, I'll talk a bit about what's happening in the world and what we might expect in the future, given all the uncertainty out there. So first, let's just dive into it. When we look at consumer spending, tourist spending in Portugal in 2024 compared to 2019, what we're showing here is the mix of spending by the tier of the merchant. So for example, in hotels, 30% of tourist spending in Portugal was at entry level, the cheapest hotels, and that's fallen a bit to 29% in 2024. And you can see the luxury segment there, the top end of the hotel segment, has been increasing its market share in Portugal. So the hotel mix in Portugal is shifting slightly upmarket towards luxury segment. And you can also see it in apparel and shoes, so spending on fashion, it's the same trend there, where the luxury merchants, the luxury brands are gaining their share of consumer spending in Portugal. And the bit on hotels is really important because tourism has been so strong in Europe the last couple of years. We're at record levels of tourism. So there's a lot of questions about over-tourism and how much room there is for growth. And we still see several channels for growth. Of course, people traveling at different times of the year outside of the peak season when there's more capacity. Also, people traveling more outside the top destinations. And the last bit is people also going towards more luxury hotels, where if you can't increase capacity, you increase the experience, the quality. And that's what we're seeing in Portugal and in other markets as well. And I can show you how Portugal compares to other countries. So this is the same data. This is showing the increase or the change in the share of luxury brands. And here I'm showing you for fashion first, for apparel and shoes. And you can see Portugal is among the top countries where there's been a shift towards luxury, towards upmarket brands in spending on fashion. And it's not the case in all over Europe. In fact, in a lot of countries over the last few years, we've seen actually a shift away from upmarket brands, especially as consumers were prioritizing their budgets when inflation was really high and they were trying to figure out what to spend on. So it's not a Europe-wide story. And so Portugal definitely stands out in that shift towards luxury fashion over the last few years. The story is different if you look at hotels. There you can see across most of Europe, there's been a shift towards more luxury hotel spending. So Portugal there doesn't stand out. It's just fitting within the broader European trend of luxury hotels gaining market share. And it shows you what consumers are prioritizing over the last few years. So how does travel more broadly fit into luxury? Of course, it's a huge driver of luxury spending. The big thing about luxury consumers, yes? Great question. So these are tourist spending in Portugal. This cross-border spending in Portugal from Portugal as the perspective of Portugal. Yeah, that's right. Yeah, that's right. Now, travel is a huge driver of luxury spending because I think maybe almost half or over half of Chinese luxury spending, for example, takes place outside China. Even for American consumers, a quarter of their spending on luxury happens outside the US. So when people are traveling, that is generally positive for spending on luxury. And that's what we're seeing here. I'm showing you here the change in the share of cross-border spending on luxury in Portugal. And you can see that it's been growing last year. So the incremental increase in luxury spending in Portugal was coming from tourists coming from abroad. And you can see it was strongest here in watches, except for last quarter there, but very strong increase in cross-border spending in watches last year. And that is a trend that we've seen in a bunch of countries where durables, so hard luxury like watches and jewelry, had been outperforming fashion, where there was a lot of variance depending on the segment of the brand. And I'll get into the detail on that in the next slide. And then cosmetics has also been very resilient over the last few years because of it's a smaller ticket item that's more of an essential, and so consumers have been prioritizing that. In most of Europe, cosmetics has been the best performing retail category since the pandemic, which has been really interesting to see. We can compare Portugal to other countries, and the cross-border story isn't as strong. I can show you Spain, for example. You can see there cross-border spending a share rising in fashion, but falling elsewhere, so more spending happening from domestic spending in Spain. I can show you Italy, and you can see there also a mixed picture. So Portugal is a bit of a standout there, where it's really foreigners and tourists that are driving luxury spending over the past year. And that's why we're focused so much on travel as part of the luxury story when it comes to Portugal. Now, there's been a lot of, last couple years, since the pandemic, we call it sort of the bungee jump effect, where there was a huge collapse in spending at the beginning of the pandemic, then a huge recovery and record growth in luxury spending, and then it normalized. It slowed significantly last year, but there was a lot of variance depending on what category you look at. And so what we did here is we segmented fashion luxury brands by tiers. So with the lowest tier being aspirational luxury, and then the middle tier being premium, and the top being absolute. And what you see in Portugal here is that over the last few years, it's that aspirational share and premium share, so that the lower two tiers of luxury that have been gaining market share. And so that suggests maybe which brands have been expanding their presence more in Portugal compared to other markets like Switzerland, where unsurprisingly there's a bigger share of the top end. And then other markets are more mixed, with the UK being more similar to Portugal, and then Italy being sort of in between Portugal and Spain. Now this is interesting because what we saw in a lot of markets over last year was that it was this middle bit, the middle tier of luxury that was getting squeezed, as not the top end of luxury spenders were sort of pulling back and reassessing their luxury preferences. But that's not the case in Portugal. It's a very different trend than these other countries, which may also explain why on the previous slide it was the one seeing that growth in cross-border spending, but it was less so in Italy and in Switzerland. Now, of course, it's not just about the category. We can also see within spending transactions the average ticket, so the average value of each transaction, and then how many transactions consumers are spending. Because luxury is such a low volume transactions but very high value in the ticket price, this has really important implications for overall spending growth. And if you decompose the spending, you can see here that in the different fashion tiers, there have been very different trends. So if we go to aspirational luxury, so the lowest tier of fashion, you can see there that driving spending is more transactions, more people spending and more people shopping, whereas the average ticket has fallen slightly, but overall you're seeing growth there. Then in the middle tier, the premium luxury tier, you see big increase in the average ticket price, higher prices, and that's compensating for fewer people transacting. And then at the absolute luxury tier, which in Portugal was losing market share, you see the ticket was sort of stable, but a lot fewer people spending. So you really see the differences there between the tiers. And then watches, which is on the durable ends, the hard luxury bit that I was talking about being more resilient recently, both the number of people spending and the average ticket have been growing, and that's driving that outperformance there. Now, this is going to be really interesting to watch this year The euro is a lot stronger now than at the start of the year. It's about 10% stronger against most currencies, most major currencies in the world. So for tourists coming to Europe, that's going to be a big increase in terms of their own currencies, of the prices they're paying in Portugal and in Europe and in any Eurozone country. So that's going to be a big challenge. Of course, luxury is uniquely well positioned to increase prices because of their pricing power. But there's been so much price increase since the pandemic over the last 5 years. There's questions about how sustainable that is, and different brands are having to navigate how much more they will be able to pass that on to their market, to their consumers. So something to be really paying attention to this year. And as I said, consumers have really been looking and navigating and trying to find better value. And we've seen that in consumers looking more towards luxury outlets across Europe over the last few years. So this is showing you for each quarter of each year, the share of luxury spending that's taking place at luxury outlets. And you can see in 2024, it hit a high there, much higher than the previous 2 years, where a quarter of luxury spending in the last quarter of last year was taking place at outlets, luxury outlets in Europe. So again, consumers have been very strategic in trying to get better value and make their money stretch further with the inflation of the last few years, and that's showing up in them shifting more towards outlets. So that's one way that consumers have managed to keep spending on luxury. The other is in e-commerce. Now, this is really interesting to see that the share of e-commerce spending in luxury continues to rise in Portugal. In a lot of other markets, it rose a lot during the pandemic, and it's been coming down since then. But in Portugal, it continues to rise, even among tourists, cross-border spending. So obviously, if this is online, this is not people coming to Portugal, but they're buying from Portuguese luxury merchants online and having the product shipped to their country. So that says something about the reach of whatever these Portuguese brands are to consumers outside Portugal. If you look at just domestic e-commerce, you can see that's more mixed. And there's, in some cases, like in fashion, there's been a shift back to in-person. And of course, for luxury, in-person remains the most important channel because of the average ticket, the average value is so much higher in person than online. But again, if you have certain consumer segments that are really seeking value, then e-commerce is a great way to reach them, just as outlets is as well. And consumers are taking that opportunity when they can see it. So that's everything about luxury retail, about things, which of course is the core luxury idea when we think about it. But the trend that we've really been talking a lot about since the pandemic, not just in luxury, but in all consumer spending, has been experiences. And this has been a trend really globally, where since the pandemic, consumers have really prioritized spending on experiences, whether it's travel or wellness, or going to an amusement park or to a restaurant, and as opposed to spending on things, whether that's furniture or home improvement or fashion. And it also applies within the luxury industry as a whole. And this is really interesting because here you can really see a big increase, a big shift in spending towards experiences. So what I'm showing you here is when you look at all luxury spending, is it shifting towards experiences or towards goods? Globally, it's very clearly been shifting towards experiences here on the right. But Portugal is a bit different, where it's been shifting very slightly towards goods. And this is not too surprising, given that Portugal is already a massive leader when it comes to experiences. And it's that growth in the brands and the new presence of luxury merchants in Portugal that's shifting the balance a little bit towards goods because experiences is already so strong. But this is a really good sign for Portugal, given that consumers are prioritizing experiences. Portugal is in a very good position to provide those. And when I say luxury experiences here, I'm thinking of luxury resorts that have spas and wellness, that sort of thing, luxury fitness events, luxury fitness activities, and also luxury beauty treatments and that sort of thing. So just really sort of any sort of luxury experience you could think of. And the one that stands out for Portugal is fitness, luxury fitness. If you see here, it's actually, there's been a bit of a gain there when it comes to luxury fitness experiences. You see Greece there at the top. It's interesting. I'm wondering what those activities are. You see health and beauty has been a big one as well. If you can see Portugal there, closer towards the top. Again, as well, you have the link there to cosmetics, and it's seen as more of a necessity, of something that's a regular spend that consumers are prioritizing. So very interesting to see. It's also interesting, as I mentioned before, with so much tourism and so much travel happening, things are getting quite expensive and quite crowded, and the world's also getting hotter. And so that is shifting when people are doing some of these activities. And when we look at, here I'm showing you wellness retreats, so these are like luxury spas, resorts, that sort of thing. You can see before the pandemic, almost half of that spending happened in the summer, unsurprisingly, peak season. But then when we look at last year, there was a bit more happening in the spring especially, so not as hot, not as expensive, not as crowded, and even a bit more happening in the winter too. So that's good news, obviously, for luxury merchants and providers, because there's more capacity throughout the year to accommodate and welcome consumers there. We can also see it in the other categories. It's not as extreme as in spas, resorts. You could see that, let me go back to full screen. You can see that it's a bit more balanced to begin with if we look at hair and beauty here, but it's still broadening out. And we can see fitness as well. You can see that there's a bit more spending happening in the autumn, for example, and the summer has also remained very important there. And this is not just for experiences. We also see it when spending on luxury retail as well. So if we look at tourist spending on jewelry and watches in Portugal over the last year, the strongest growing months were in what we call the shoulder season. So again, here are the autumn months, and then the spring as well. So again, this is what we see in travel more broadly, that people are prioritizing travel a bit outside peak season. And then that also shows up in the shopping and the spending that people do when they're traveling. So that's the experience side of things. Now to talk a bit about what's to come next. Here I'm going to do a little bit of the economics and some of the indicators that we tend to look at. And so a lot of the indicators I'm going to show you are going to be backward looking, because a lot of the things that have happened in the world are very recent. They don't show up in the traditional economic data yet. And when you look at the data that you have, it's quite positive and quite resilient. So here I'm showing you key indicators for consumers across Europe. I have the US there as well. Basically, if the dot's green, that's good for a consumer. If it's red, it's bad. And in particular, incomes are growing quite strongly and faster than inflation. So consumers are gaining purchasing power. If you look at income growth in the Eurozone as a whole, it's robust, and it's as high as it's been at any point in the last 10 to 15 years. So that's really positive. It's especially strong in Portugal there, you can see as well. After the period of high inflation, we've now flipped it, where incomes are growing a lot faster than inflation, so really good for the consumer. And then there's, of course, not just people's incomes, but if they're employed, if they have jobs. That continues to grow as well, although it is slowing. You can see here employment growth in the Eurozone still positive, but it's slowed a lot since the pandemic, of course. But unemployment is close to record lows in a lot of European countries now. And Portugal, the picture is still positive, job growth, Spain as well. You can see it's a bit weaker in Germany, unsurprisingly, given that German economy has been struggling more than Southern Europe. And then you see the US as well, still growing, but a bit more slowly. But overall, a pretty positive picture. Then if we add in wealth, and wealth in Europe is mainly house values. The stock market is really just the absolute top of consumers for whom it matters. It matters more for US consumers in general, less for European consumers in general as well. And house prices there, especially Portugal and Spain, are growing quite strongly, given the strong inflow of people and how strong the economy has been. But in the Eurozone as well, it's also rebounded and growing at a decent amount. So in terms of people's wealth and the assets that they have, not talking about what's happened in the stock market the last few weeks, overall we're in a pretty good place. And what's really important if things take a turn for the worse is that fundamentals in terms of household balance sheets, in terms of how much debt people have, it has fallen a lot over the last 15 years. So you see across the board, you see the deep greens there. Any country you look at, household debt has fallen a lot and continues to fall. And that's really important. The reason why the financial crisis was so damaging was because there had a huge amount of credit growth before that. So when the crisis hit, not only did people lose their jobs, but they also had this debt that they had to try to pay down. And that's why the crisis took so many years to recover from. So at least here, regardless of what happens in the next few months, we're in a really good position fundamentally to weather the storm. And then finally, there's how consumers actually feel, and this is a bit weaker than the fundamentals would suggest. You can see in the Eurozone there, we're not fully recovered to where we were before the pandemic. You can see in Germany there, more pessimistic, whereas in Portugal and in Spain, more optimistic. The economies have been performing better in Iberia than in the core of the Eurozone. So taking this all together, we're in a relatively good place. Of course, the question is what comes next. And of course, we have to think specifically about what type of people and consumers those who spend on luxury are. And if you look at this, they've been more resilient in general. So this is showing you consumer confidence overall in orange, and for the highest earners in blue, so the most affluent consumers. Now, in general, of course, confidence is higher among higher earners. They have more disposable income, makes sense. But if you look over the last couple years, the gap between the highest earners and the rest of the population has widened. You can see that really visible in most countries there, a wider gap now than we had before the pandemic. And also, the confidence for the highest earners recovered almost fully to where it was before the pandemic for the highest earners, but it was an incomplete recovery for everyone else. So until now, that was a big part of why the luxury industry was outperforming, because the highest earners were so resilient. Now we have to think about how any negative wealth effect would affect the confidence and the spending of those higher earners. So to think about what's coming next, I think the challenges are very clear. For luxury, of course, in Europe in particular, a much stronger euro is a big challenge when you think about people coming from outside Europe. And then, of course, the tariffs that you add on top of that if you're exporting to the US, of course. But I think there's three reasons where there's real potential for optimism, or at least resilience. The first is that consumers, like I said, have been prioritizing experiences, and there's no tariffs that you can put on an experience, and by definition, you can't manufacture one, and that's why little Portugal in London is not the same as being in Cascais in person, and so luxury is uniquely positioned to offer that unique experience that can't be replicated or traded or imported. So that's one. The second is that, just in general, this is the category that consumers have been prioritizing since the pandemic. We've been surprised at how resilient some categories like travel have been, given all the challenges that consumers, and especially European consumers, have faced over the last few years. They've made cutbacks in some categories, some areas, like those related to the home, to keep spending on areas related to travel. So that's the second. And then the last reason is that businesses and consumers have adapted in ways that we always failed to predict. And if we think this is now the third sort of economic shock that Europe's going through over the last 5 years, we had the pandemic, then we had the energy crisis and inflation that came after that, and now we have tariffs. And every single time, the worst predictions about the economy didn't actually come true because consumers changed their behavior, businesses found new ways to meet consumer preferences, and the actual outcome was better than had been expected. And we usually underestimate the ability and willingness of consumers and businesses to adapt. And I don't see why this time would be different. And that's why I see some room for optimism despite the very obvious challenges ahead for luxury in the next few months. So those are all the insights that I wanted to share with you today. It's really good, again, to be here with you in person, to share the kind of work that we can do at the Mastercard Economics Institute, and looking forward to hearing the debates after this. So thanks very much.